Welcome back, folks. You're looking at a chart of gold. We are looking at a 15-minute chart. And on Tuesday, I'd mentioned that we would take these highs, okay? 2412, that was the target. That was a long entry taken from down here, London, okay, on Tuesday. I've already journaled that. You've seen that. I've taken that up, taken that off as we've come up. Actually, the trade that I journaled was the high of Asia, okay? That was a trade that I journaled. We'll come back to this chart in a moment. So that was this trade here, okay? That was journaled, high of Asia taken, which is what I've mentioned. And I did a video on this at the entry, so go and watch that video if you haven't already, okay, on why I entered down here London, what I was expecting, okay? Now, I said on that video I was expecting 2412, okay? So I exited here, but we continued on Tuesday. We tapped just close to it, but didn't take it out. And then Wednesday, we went up and we've taken out that 2412, okay? Then I posted another publication on Twitter, and I said, still looking for that 2412, okay? This is prior to the 2412 being taken, and I said also, then we would reach down into this liquidity of 2396, which we have also done, okay? Now, I want to mention something here before I go on and talk about yesterday's trading and what might be next for gold. When I journal my trades, I only journal the smallest position size here on Twitter, okay? So I've journaled this, okay? Really, it's just to show that I do trade these. I do follow through on what I expect the market to do. I capitalize on that to give you the confidence that you're learning from someone who knows this market, okay? Now, you might be thinking, well, if I was expecting 2412, which is what I mentioned on my video, why did I exit at these highs, 2404? That's because I don't publish all of my positions, okay? So, for example, on that particular long, I haven't shown you all of my position size, okay? So I haven't shown you just enough to give you the confidence that I do trade, and I've taken that position off in Asia, but I haven't shown you the other ones that I've taken off at 2412, okay? And that's typically how I trade. So there's my buys, okay, for that Tuesday, okay, all the way up to 2412, right? So that's the trade for my account on that Tuesday, okay? So I don't publish every single, my entire position sizing. I just need to publish enough for you to know that I do trade and I do get the targets that I talk about in advance, okay? So just be aware of that. Just because I don't, if I've said we're going for a target and I've said it with confidence and that's what I'm expecting, then I will trade that. But I don't always publish every single, all my position sizes, okay? Because most people can't relate to that kind of money, okay? I want to make sure that you understand that what I show you here is achievable, okay? There's obviously an element of risk that you need to understand, and you need to have a good understanding of the market's price action and obviously risk management and trade management, and have capital to put on the trades as well, okay? Now, let's talk a bit about yesterday. Okay, I'm going to go to an hourly chart. So let's talk about what we've seen the market do yesterday, okay? So I want you to notice something very important, okay? So London, we've come down. We've made an order block, taking liquidity. I've spoken about this for why this was a level of interest. I've already marked it. This is a 4-hour rejection block. Go back and watch the original video on why that's an important level. We've come back, made an order block, and moved up, okay? Now look at the rest of the day. So this is all of Tuesday, okay? And this is left equal highs here, okay? 2412 hasn't been taken at this point in time. And what do? So in New York, on that Tuesday, we come back down into this order block and continue higher. So take note that down candles are supporting price. So down candles move up. Down candles into the order block move up. Okay. This move here, Asia. Okay. Basically Tuesday night Asia. Down candles into order block. Now we get above the 2412. Okay. This happens inside of Asia. Again, down candles into these order blocks. Okay. Down candles into these order blocks, right? This is now London, and we have a big pump up, okay? That goes to a very key level. We'll talk about that in a moment. And then we start the move down into this level here that I mentioned, 2396. My target on these trades down was simply the low of New York. This was New York lows on the day before, okay? So this was New York low on Wednesday, but my target was the low of New York on Tuesday because I can see equal lows there. Now, I haven't journaled these trades, so I'll journal these shorts later today, but I'll show you here what this was yesterday, 24th, okay? So there's my, for the shorts on the 24th. So I've taken shorts and I've taken those exits along the way, but 2400 was kind of the lowest level that I was looking at, and that was based on targeting the low of New York the day before, Tuesday. I've always said on my videos, I don't need the best exit, right? So even if I'm looking for 2396 down here, I don't target the best exit. I want to target the easy exits, right? So this was an easy low to target. This was an easy low to target. This was an easy low to target, okay? Low of London here. This is low of Asia. This is low of New York. These are previous sessions, okay? Not specifically yesterday, New York. This is New York on Tuesday, okay? So I haven't journaled those shorts, but I've traded exactly what I was expecting. I was expecting 2412 to be the draw on liquidity, on Tuesday, looking for the high of Monday. Okay, we didn't get that on that Tuesday. I've taken profits along the way. So here is that Asia high that I had taken, right? This trade, the Asia high, and that's what I've journaled for that. There's no need for me to journal any other trades. But as I've shown, there's other trades I've had on and taken off once we've achieved the 2412 objective. Okay, and then I, as mentioned in this post, looking for 2412. Then I've got a star here at the next draw on liquidity, and you can see I've also mentioned that is what I'm looking for as a key, which is the low of the Tuesday New York. Okay, so we've taken that 2412, and then I'm just looking for where to short. Okay, the timing, and then targeting at least these lows here, not having to wait for this level here 2396, because this is an order block. Okay, so coming back down here, you could expect price to move back up. So anywhere coming down into those candles could have a reaction to go higher, which is why I don't specifically target. That still could get hit and probably will, but I like to have easy exits. Okay. Now, I really wasn't expecting. I did have a 2432, this level here, 2430, 2432 as a level, but I wasn't really expecting us to get all the way up there. Okay. Now timing was a little bit off. Okay. And that's because it's a news day. But typically 9:30 to 10 a.m. The end of that candle, this is the 10 a.m. candle, we'll make the high, as I've mentioned before, and we make the high at the end of that 10 a.m. candle, just like we did Wednesday last week. Okay, the highs were made at New York in that last hour. We started to move down. Okay, now let's talk about why I have these lines here. So number one, if I go to a 4-hourly chart, I have mentioned this previously. This, if it just brings down, this is the last down candle before this move up. Okay, now this is the manipulation down move, and the real move is this move up. So when the market goes through that level, it needs to come back up to mitigate. Okay, and that's what that level is on my chart. So we've come up and mitigated, and then continue to go lower. It's similar to this, what I spoke about in a previous video, when I've taken longs from this 4-hour move, okay, up to the highs. Okay, you can go back and look at the previous videos. We had a similar exact situation where we've come down to go up, and then come down to mitigate. What they've done here, this was the push up to go down and then up. So this level has to be mitigated, and they've come down and then they continue to go higher. And it's exactly the same thing here. This move is they've pushed the market down, manipulated to go up, and then they've come down through there, and we've got to come back up into that, okay, to mitigate and then continue. Okay, so that's why that's important. Now, I had some confluence. Okay, so let me show you how I had the confluence. So if we take the dump of the initial dump New York on Monday, okay, if you take that dump, okay, and you project from that high, the exact same range, I've taught how to do this in previous videos, that exact level comes up to where that black line is, which makes the exact high. Okay, so I can show you, if I draw a box, we're looking at this dump, right? Let's draw a box of that range. Now I've done this previously, okay, with you. So let's draw that range, and let's change the color of this. Let's make this, okay, there we go. So all I've done is taken the range of that dump, okay, the range of that dump, and I'll just use the Fibonacci tool, right? But I'll just show you how you can do this manually. Let's take that and project up from the highs, okay. Let's just bring it down. So there we go. So we're taking that exact dump, that manipulation that occurred on Monday, start of the week, that dump, okay, and projected it the exact same range higher, and you get the exact high. Okay, I've shown you how to do this previously, but it takes practice. You need to know, what you're doing, where is that manipulation. You've got to identify the manipulation. It's going to be a manipulation at a key session. Okay, so that is the New York time, 7 to 10 a.m. The dump early in the week in New York, that's the manipulation, projected up one level, and you get the exact high made for the high of the week. High of the week, as I've said before, I'm expecting to be on a Wednesday, okay, and that's typically where I look for my short. So you can see we've now tapped into that exact gap that I've mentioned, 2396. Okay, so that's where that line is coming from, and you can see that I've shown you the shorts that I've done for yesterday. Okay, so let's now talk about what's next for gold. So I need to see a bit more information. Okay, there's two. So I'm looking at this area here, 2350. Okay, that could be the next draw on liquidity. Okay, so we could head down there, or we could head back up, and this could be the draw on liquidity back up to rebalance this area which is still open. Okay, so I'm not sure right now. I need to see more information, so I'll make a determination based on what I see as the day evolves. But I think that for the rest of the week, we possibly would remain bearish, and this level here, 2350, will be the next draw on liquidity. There's a lot of stops under there, okay, and there is this fair value gap under there as well. But I'll need to see more information, okay. So I think in the immediate term, let's just take off these lines so it's a bit cleaner. This I think will be the next draw on liquidity right now, okay. This is this is known as low resistance liquidity because this low is higher than this low, and that's why we referenced that as low resistance. Okay, that's also a swing low, so there's going to be a lot of stops under there on a daily chart. Okay, that is a swing low. Now I need to see more information. Okay, right now I'm not sure, so I need to see other day vols. Sometime maybe in London or New York, I would kind of know what I'm expecting for the next couple of days. Okay, the key lesson in this video is to determine order flow. Okay, you don't have to get the exact high or the exact high entry or the exact low for your targets. During the day, look at what's going on in order flow. Are these down candles supporting price? Right? Are these down candles supporting price? Are we going down and two down candles? Are they supporting price? That gives you order flow. Okay, and then what could be the potential draw on liquidity? Okay, so I hope the video was useful. I'll do a couple more videos once I'm a bit more clearer on where I think we're headed later today. For now, review your charts, review these down candles and how these down candles, which are the order blocks, okay, have supported price on the way to try and identify order flow throughout the day. Okay, but one thing I want to mention, look at the 15-minute chart. If you look at the 15-minute chart, whenever the market's doing this, up, down, all day it's just been crawling, right? Look at the move up here. That was a very clear indication for me that this is a crawl reaching to some level that it needs to reach to. Look at the way that it's moving up, down, okay? You're not going to understand that just by watching this video because it's not going to make any sense to you. That'll only come with experience. But looking at this price action, look at this entire move up and then look at this move down. Where's the real move? This move down is the real move. Everything else is just a crawl. It's taken all day to move up and then just a few hours to come back down. Okay, it's come down about, what's that? We're up the top here, 1, 2, 3, 350 pips so far. Okay, so you got to understand order flow and then you got to understand price action. And you will learn that as you continue to watch my videos. Let's have a look at a 4-hour chart. Okay, so you can see, let me turn these lines off so we get a cleaner chart. Okay, even on the 4-hour chart, it's just crawling up, down, up, down, up, down, up, down, up. And then in 3 candles, we get right back down to the lows. Okay, so they're kind of difficult things to grasp because you won't really understand what a crawl means unless you're looking at the charts like I am day in and day out. Okay, so I will now talk with you in a future video.